morning and welcome everyone to the Ultimate Trading webinar for beginners. My name is Danny and I will give you the webinar today. And we're going to open the webinar, as I said, with an introduction to this facility, which is called the Web Trader. But first of all, we will get to know AvaTrade a bit better. So as you know, we are a regulated company. We're here since 2006. We have 9 licenses worldwide. You probably noticed that I've opened this notepad here for the notes. Of course, if you guys would like to do the same, to jot down some notes, this might be advisable. If you got a question or a query along your journey, you can easily contact our customer service right here at the bottom left to either chat with us or on the WhatsApp. Or if you're using a different interface, you can just contact us directly through cs@avatrade.com. And if you got a question regarding trading, not regarding customer service, you can ask your senior account manager. That can be giving you full support through the process in terms of the trading side. So we've got customer service for customer service and a senior account manager for trading. They're not going to tell you how to trade, but they can provide you with all the facilities under the trading umbrella in terms of questions, let's say questions regarding trading, okay, regarding risk money management as an example. And analysis. You got any questions about analysis? And the Web Trader is an example. Basically, everything, calculations, whatever you want to ask from the account manager under the trading umbrella, he is the go-to person, and that does not cost you anything additional. So you can check your eligibility with the customer service after you have made a deposit. Now, moving onwards, as I said, we're looking at the Web Trader. To enjoy the Web Trader, all we got to do is just to log in with our email and password to the website. And I wrote here, even though we're looking at the desktop version, we also have a version we have an app. So this is called the Web Trader, and we have AvaTrade's trading app, which you can find on your personal phone in your store. And underneath, actually, I'm going to write it at the top. So we've got the MetaTrader 4, MetaTrader 5, Ava options, Ava futures, and Ava social. Now, Ava social is, since this is a webinar for beginners, I think it might be appropriate to say a few things. What Ava Social allows us to do is it allows us to do copy trading. What exactly copy trading is? Copy trading is, let's suppose that we're trader A and we would like to copy trader B. Okay, what will happen in this case? Let's suppose the trader B here is trading Aussie Canadian and he's taking a position with a buy, and he's going for 1 lot as an example. What will happen when I copy trade another trader is I link my account to his account, and whatever position he's going to take, I'm going to take as well. Now, if you'll notice, okay, let's bump it up a little higher. There we go. Now, we haven't learned that bit yet, but for people with a bit of experience, I guess this would make sense. When I copy another trader, if he succeed make profits, I succeed and make profits. But not always I want to copy from a trader that I have the exact same balance as I do. So let's suppose that trader A has a balance, we're trader A, so a balance of 10,000, as we can all see, right? 10,000, this is a demo account. And let's suppose the trader B has a balance of 50,000. Now, this thing here called margin impact, this is the necessary amount for me to take the position. Not that, not this, and not this. Now, we're not getting into depths with that because we haven't learned about trading. We haven't gotten to the second part. But if I'll break it down for you, this trader has 50,000. We have 10. But still, we wish to copy from this trader. So how can this be done? In the app, inside of a social, what we can do is we can still copy, but we can determine to go with a lower lot size. This way, when this position requires 16, which we obviously don't have, we can go for a, let's go for, no, okay. All right, this is, I'm not saying if it's, I'm not getting into if it's good or not in terms of risk money management, but now we have the ability to do that. Another thing that I could do is just to lower it to the bare minimum. Now I'm going to copy the strategy with the bare minimum, and I don't need 50,000 in my account. I can do this with 10. I can even do this with 1,000. Yeah, so this gives me the ability to contemplate and decide if this strategy is for me. Maybe I want to go for, you know, to its full extent, and I'm going to add 50,000 to my account. Maybe not, but this is a decision I can take along the way. Anyway, copy trading can be a huge time saver if we're doing it properly. Of course, I would suggest to make a little bit of research and to find out if the trader you want to copy is good for you or not. Now, if there are any questions regarding that bit, you guys are welcome to ask. I wish to carry on. There is a question here from Harold. Can't you make it bigger or expand your side? I'm not sure what do you mean by that, Harold. If you can explain to me, that will be amazing. Now, let's carry on a little bit. Let's carry on with what we have here. We're just gonna, sorry guys, sorry. Right, I lost my voice there for a bit. Anyway, as we can see, we're going to carry on with a web trader. We're going to look at the menus of what we have here to the left and see how we can make it useful. If we'll begin from the top, we've got here the 3 lines. This is actually our personal area where we can add a sub account, where we can add funds, we can withdraw funds, we can do whatever we need in terms of our personal details. This is right here. Underneath is trade. This is what we're looking at right now. This is where we can trade. We're going to get to that. Positions speak for itself. Orders, I guess it's quite the same. And history also explain itself, but this maybe I'll just explain the general idea here. So we've got trading history, balance history. We've got the date where we want to be selected, and then we can choose what will be displayed. Underneath, we've got signals. Let's look at the signals just for a bit, just to understand how it works. Okay, if it looks like this instead of like that, this is because you see those 2 arrows. This is because the chart is expanded all the way up. So if we click on the arrows to fold it down, we now see the signals list. Now, if we go from left to right, in here we've got what signals, what's the name of the signal, what type is the signal. But we haven't learned what stop loss is, entry, take profit, and then the signal produced, and the view signal, which we will do last. Now, entry price is typically initially where was the signal started, what price we started analyzing from. Take profit is, let me maybe just shed some light. We haven't started the second segment, but just a general idea of how it works. So we got market execution, and we've got pending orders. When we open a position, it doesn't matter if it's a buy or sell. We've got 3 pending order. Okay, execute when price hits, take profit, and stop loss. You don't have to remember anything that I'm telling you, that I'm writing for you right now, because this will be displayed on the website, but I'm just simplifying it in my own words so it will be a bit easier to comprehend. Execute when price hits is actually opening a position when reaching the price. Take profit, closing the position with a profit when reaching the price. This one will be closing the position with a loss when reaching the price. And oh, automatically, I always forget, automatically. That's the key ingredient of the idea behind pending orders. This is why they are called pending orders, because it happens automatically, right? Now, with this in mind, something here doesn't make sense. Maybe we'll keep it down like this. There we go. This will be a plain buy or sell. Okay. Now, with this in mind, now that we know we've got an ability to mark a price, and then the platform will close it automatically or open it automatically, like it says here. This is how the signal is constructed. We're going to have the initial price. This is allegedly where we started to analyze the signal. Let me just show you. I'll show you. Maybe we'll pick maybe CAC 40 or not one of the indices. Maybe let's go with oil. We can see that oil here, the entry price is 62.28, stop loss 61.7, and the take profit is 62.80. And we can also see the signal produced. Keep in mind, there is a certain importance, to my personal opinion, if I'm taking a signal that was just analyzed or a signal that was analyzed hours ago. Yeah, since the market is moving, and it would make sense that the price has changed, and sometimes the price changes so much that the signal is futile, as we can see here when the values are blank, when the take profit and the stop loss are blank. This means that the signal is no longer useful. So if we'll use one of them as an example, we'll take Euro CHF, just doesn't make a difference. Just want to show you the message here. So we will see that the levels has already passed. And if we'll try to use the signal, that's how it looks like, by the way, then it's not going to let us. Typically, when I see a signal, I see, okay, this is, we've got here buy scenario, we've got buy and sell scenario. Let's go with a buy. So I click here, buy, but nothing happens. Nothing happens. We're going to show you in a minute what happens when the signal is valid, but when it's not valid and the take profit and the stop loss are blank, this means that the signal is no longer useful. And the reason is the market has already reached a key level, which is exactly what I said. Now, if I click here, I'll see that the signals are not provided by AvaTrade, they are provided by the Trading Central. And if I'll click here on the arrows to fold it down, and I'll select something valid, like we saw in the beginning, like oil. We click here on oil, view signal. Now we don't get this this message, and it seems like maybe we'll go with a buy. We'll go with a buy. So I have here support and resistance level, take profit and stop loss, the buy, the sell scenario. I can, even if I would want, I'm not obligated to do it in any way, right? But if, for instance, I would want to have my own analysis on top of the analysis that I received from the signals, I can also do it here. But if I don't, I can just click here, buy. Yeah, I'm pretty much good to go. You see, I've got a take profit ready. I've got the stop loss ready. As I wrote here, those will happen automatically. Yeah, basically, if it gets to the green line, and since we are with a buy, my take profit will always be in a higher place, and my stop loss will be in a lower place. Now, to help emphasize the scenario here, if it gets to the okay, just a second. We'll take the stop loss, put the red line, yeah. No, 61, 61. There we are. And I don't see the chart doesn't look properly because we haven't matched the validity of the chart we saw outside. Let me show you to this chart. So basically, what happens here is we're looking at minutes. If we'll click here on the upper left corner, we click here on 1M and we fold it down. We'll see that 1M is selected. What does this mean? It means that now each candle on the chart represent 1 minute. But in here, in this chart, each candle represent 1 day. All right. So if I'll click here on the crosshair, enable the second option, we can see how the time changes minute by minute. Minute by minute. But what we actually need is we click here on 1M, we scroll down, we click on D1, and now we get a much better picture. We can click here, scroll down, click here and pull it up a little higher, and now it would make more sense. And now if I'll go with a buy scenario, just like we wanted to do, and we'll click here on the 4 hours as an example, then we can place those levels and it would make much more sense. As I said, take profit will be green and the stop loss will be red. And since our take profit is at 62.8, there we go, we'll make it green. Now we are basically good to go. Now, if I would like to make any kind of improvements, as an example, I can always change the value to what I want, and I can also modify the size of the position since the size is like that by default. So I don't have to go with what's in here. I can make it smaller. As you can see, I can make it bigger, and then yeah, you get the general idea. Again, if I don't want to do any analysis, I just showed it to you so it will be easier for you guys to understand. But if I'll take gold, again, another example, click here on the arrows. This time we'll go with the sell against the recommendation, and we are good to go. As you can see, I haven't done any of that, and this is set for me to happen automatically. I can click here sell. If it gets to the if it gets to 3,998, I'm gonna make $188, and if it gets to 4,060, I'm gonna lose 57, exactly like it's written over there. And that is just great. Guys, if there are any questions regarding anything that I said so far, please ask away because I want to carry on. If there are any questions about either the introduction or the signals or anything else, feel free to ask. So this is super simple. As I showed, it took me like 10 seconds to show you the other example. Let's move on. The analysis we're getting here is considered technical analysis, since what's elaborated in here is the, support and resistance. Okay, let's wipe it out, and then we'll write types of analysis. And then we've got technical analysis. We've got fundamental analysis. In technical analysis, we're going to find support and resistance. We're going to find averages. We're going to find statistics. We're going to find pivot points, indicators, and so on. And this will be our how. This will be how things are moving. What about fundamental analysis? So we've got economical decisions. We've got any kind of reports, news, articles, earnings season. Okay, and this will be the Y. Now, I get a lot of, it's very common that people want to do one of those two, and that's fine. You don't have to do both. But I think there is a certain level of analysis that we can get to. So we can either do, they both, to my personal opinion, are equally important. So if I know how things are moving, but I don't know the reason, I'm not sure I will get the same level of analysis. And if I know why things are moving and I don't know how, this means that I don't know how to read the chart, to find entry, to do the proper setup. So again, I'm not going to get to the same level of analysis. I'm not saying if it's good or not. I'm saying here that we can get to a certain precision with analysis. We can never guarantee anything, but we always, at least I'm always trying to improve and get to the most precise analysis that I can. Now, so what we saw here is obviously technical analysis. There is no news in here. So how do we get the other part? One quick way is in the news section right here underneath. And in the news section, we've got here the pre-European market brief, the NZD USD, sinks RBNZ, rate cut, gold above $4,000 mark. To be honest, if you would ask me about gold getting to 4,000 2-3 years ago, I would probably call you crazy. But we witnessed another all-time high, which we could possibly take advantage. How could this be done? If we go through the article here, we might have a bit of idea what's happening behind the scenes. Underneath, under 4 related instruments, we clearly see crude oil, gold, Bitcoin, and pound. So we understand that this article somehow is related to those things. After reading it, we can go to the market and do our analysis. Next is under the this bowl globe icon, which is discovery. And under discovery, under let's look at the market buzz. We can find even more specific news about let's say stocks. As you can see, there are lots of companies here. Tesla is right in the middle with the biggest bubble. Yeah, and we can even align it like this, like a table. Personally, I kind of like this bubbly thing. We have different categories, commodities, other stuff here as well. But if I'll stick with stocks, and I'll click on what's in the middle, which has the most mentions, then we see some parameters in here. Product release, product demand increase, earning announcements, IPO pricing, and price target lowered. Not always I have all the time in the world to sit down and read all of that. Okay, so what if I want to specify on the IPO pricing, and then I only get news related to that, or something else, the product release is an example. So I can again focus into that, and I can even enhance my research, go Google that, I can expand it in so many ways, right? I don't have to, but this is a nice way to get the initial idea, and then we can take it as far as we want. Yeah, we can click here on the arrow, go back to where we were. Very, very simple. Underneath, the last thing that I'm going to show you before we get to the practical part, I know guys that you are waiting for the second part. We're getting very, very close to that. Last thing that I'm going to show you will be under the economic calendar. So this is for click on the economic calendar. In the economic calendar, we've got all kind of okay, so it seems like there are some filters here. Otherwise, this list would have been much more, much more generous than what it's at right now. So we'll click here on the reset. Then we click on the date, and then we click on the date of, let's take another week. And when you see this blue trail among the dates, you see that those dates are selected. And as you can see, this is all grayed out, all grayed out. If I'll scroll down, we'll see it's all grayed out, yeah, until we see this red line. So this red line, sorry, what's underneath is current event that didn't happen yet. We can also know that because if we'll go through the structure of how the calendar is constructed, we've got here the date, the country, the name of the event, how strong we think that this will impact the market, and actual, which is the result, forecast and previous. So once we see some numbers on the actual and we see the results here, we know that those events already happened. Otherwise, how would we know the results? We could never know that, right? So if we see this column here that is with the numbers, we know that those things happen, those things didn't happen yet. Now there are lots of things here that we don't necessarily want to see. So how do we filter, for instance, only US? We click here on the arrow, we select US. If we want to add Aussie dollar also, we click here on Australia, and we can even add anything we want, the yen, anything we want, really. Just look how easy how easily that happens. Now we get only and specifically the Aussie, Japanese yen, and dollar, US dollar news. We see this segment above the red line. We spoke about it. Those things happen. Those things didn't happen. Now, what if I want to see only the events that really, high impacts events? I don't want to see all those, low, medium. Okay, so how can this be done? We click here on high, and now only high events. Oh, no, didn't get any high events. We will expand the search a bit. There we go. Yeah, now only high impact events. This is extremely useful. And on top of that, guys, I would like to say one last thing regarding the calendar. How can we be on top of those events if we are busy during the week? So in here, you see there are 5 icons, 1, 2, 3, 4, 5. The fifth here is at the calendar. And in at the calendar, we can book the calendar into our calendar. This means that we're going to get a message, at least that depends which calendar you're using, but typically what happens is you get an event booked onto your calendar, and then you don't even have to remember, because you're going to get a reminder, and then you can go to the market, you can do your, the setup that you want, and then you are ready for the event to happen, and you can do it the best way you can. All right, let's begin the second part, guys. As I said previously, if there are any questions until this point, feel free to ask. But now we're going to begin the practical part. So we're going to get rid of, actually, we don't have to delete that. So we're just going to push it down like that. And on the top, we're going to write, we're going to find an instrument. So first, what I want to do is I want to click here on the icon at the top to send us back to the default screen. Now we're in the default screen. What I'm going to do is I'm going to search for an interesting instrument to begin with. So one way to do it is by the categories in here. As we can see, we've got Forex, indices, cryptos, commodities, stocks, ETFs, and bonds. We can select manually from one of the categories, maybe commodities, and maybe agriculture, and maybe platinum. Okay, and what's that? 4 hours. Let's change it to weeks. Okay. I don't have to be a genius. Okay, I don't have to be a professional trader to see what's going on here. I mean, we can all see that it's increase of 76% from bottom to peak, a little more than that, 87%. That's just insane. Now, if I'll compare it with just a quick, we're not doing anything crazy. I promise you, we're not doing anything crazy. But I just want you guys to see. That's all. Just want you to see. We're gonna. Just a second. Okay. Now you're probably wondering, Danny, why are you showing this to us before we know how to do anything? Well, the reason is, guys, there is something in trading called correlation. Okay, correlation. There is something called correlation. What we want to do sometimes is when we analyze a group of instruments, of course, every portfolio, a portfolio can be as individual as it gets. I mean, someone can trade only stocks, someone can trade only commodities, someone can trade commodities, stocks, indices, and currencies. Yeah, so, but sometimes what we can do, which can be helpful, is we can see what common thing, what instruments can have in common, define this correlation, and maybe use it in our favor. So we're looking at all things that are metals: silver, gold, and platinum. We're looking at things that are all bullish. And if I'll check the percentage in here, oh, if I'll check the percentage in here, no, it doesn't. We can find similarity in here. Yeah, you can find it's not the exact ratio. We're not looking at the exact ratio here, but I guess you guys, oh, it doesn't. It's more difficult when it's like this, you know. Let me try again. Yeah. Anyway, you guys get the point. What I'm actually telling you is, be creative with your analysis. Use whatever you can to make the analysis make sense. Let's stick with platinum. Oh, something's happening here. Get rid of that. Okay, we'll click here. We'll click here. We'll go back to default. All right. So with this in mind, it's quite obvious platinum has still has the possibility to go higher. I mean, from what we see here. So I can either take a buy now. It's optional. Or I can maybe think about it a little bit with you guys and see what can be done. Now, before we make any more progress, I would like to clarify what's happening in here on the top. So this is actually a search bar. Even though we picked our instrument manually, I can search here something that I want, quickly select it from the list. And one thing that I would like to ensure when I'm using this is I want to make sure that the instrument is displayed correctly. You guys probably notice I've switched from platinum to NASDAQ, but we still have platinum here, right? So how do we fix it? We just click buy or sell, and then we get, just a second, guys. So what we can do, as I've explained, is if we switch to another instrument with the search, like I'm doing currently, just watch. We're looking at NASDAQ. We clicked on buy or sell. We get NASDAQ, and then if I search platinum and I switch to platinum, we're still on NASDAQ. So I gotta ensure that I'm looking at the right thing, clicking buy or sell, and we fixed it. Now, moving to the right, we've got here the time frames. We already know that from the signal section. Moving to the right, we've got here candles, lines, whatever you want. If we keep going to the right, we can enable or disable the crosshair. This is actually what's giving us the data from the candles. No crosshair, no data. Okay. With crosshair, we get the data. We can keep going to the right. You guys saw how I split the chart to 3 charts. In here, in the indicators, we can add an indicator. Just click and drag it to the right. Click save, and we're good to go. To remove it, click here, click on the X, click save, and it's done. Now, how do I begin? What's the next thing that I'm going to do here? So I have identified here platinum. Platinum seems to go up. There is no previous record. If I look for the last time that it's been on that price, it wasn't even close. We can see that there is a break here, little break here. Okay, so that pull down in percentages, we're looking at 15%, give or take, pulled back and then up again. Recently, last week, we also have another pullback, roughly 8%. So if I actually, you know what, let's focus on the current candle, current week. Okay, and with this current week, we see that the candle here is a hammer. Yeah, so it has a tail. The tail is almost as big as the body itself. What does this tell us? It seems like what happened here is first platinum pulled down, and then it climbed higher. This is what's giving the candle its shape. Let's look at the open. Okay, so we see that the open here is 1617, 1617. And then we see that the low is 1401. 0.5. And then we see that, sorry, that's not what we're looking for. We're looking for here. So we've got the low here, which is 1551. Okay, and then we've got the upper, which almost closed on the high, but it didn't. It closed a couple of dollars slower than that, but we get the point. So what happened here is down, up, and then up. How could I possibly know that? Let's switch to days. Because the shape of the candle. This is the shape of the candle, so we get the bearish correction and all the way up, right? So until if, for instance, I want to buy now. Maybe I want to buy, but I don't want to buy now. Why? Because again, if we go back 2 weeks and we look at the shape of those candles, and we understand that still there is a possibility for a pullback. I don't want to buy when it's high. I want to buy when it's low. So maybe I would like to target this 1617 or maybe a little higher than that. But let's keep it, you know, keep it like this. Maybe we'll mark the let's go for 1750. Okay, let's go 1750. Yeah, make it green. Okay, and for my buy, okay, we'll get there. We'll get there. But at the moment, let's stay with what we've got. I'm gonna go and make my lot size 0.01 because we can always increase. I'm also gonna jot down the name of the instruments we're analyzing, which is platinum, and then I'm gonna go ahead and I'm gonna write down a couple of things: target, time, movements, and units. Now, if I tell you guys that platinum is going up, but I don't specify anything, I'm just telling you that it's going up, is this enough for you to close a position? Not necessarily. Why? Because let me show you how frequent the market is changing. This frequent. I just changed to 1 minute and just look how fast the market is changing. So if I told you it's going up, I might give you great analysis. As you can see, it does go up, but in a minute it might go down again. So as you can see, it's going down. So why am I explaining you this? To make profits, I don't just need the market to go up and down. I need to close the position while I'm making profits. This means that for every dollar, for every 1 unit we buy or sell, each $1 movement equals $1 profit or loss. Keep that in mind. I'm gonna keep going, but I want you guys to remember that. So we've got price difference times number of units equals possible profit or loss. You don't have to remember. You don't have to remember any of the things that I'm telling you because it's written for you right here. Now, if, for instance, as we saw, I think that platinum must go up. I can't be too sure how up, but I think it can go a little higher. And I'm targeting 1750 as an example. Okay, at this point, I have absolutely no idea how much I can make, how much I lose, how much money I'm using, how many units I need. I basically don't know anything beside the direction. So we can get better than that. The following thing we can do is we can enable the take profit, we can enable the stop loss, and we can enable the execute when price hits. We spoke about it in the beginning. Execute when price hits allows us to automate the entry. So instead of buying now, I actually want to buy it at 1650 because I believe that if it will go, let me see, maybe a little lower than that. Let me go 1550. Let's go 16 flat. Let's go 16 flat. I'm quite happy with that. And just another quick check. You guys see how I always change the time frame. I never analyze one time frame. Okay, so let's go for the peak a little higher than the resistance, or maybe push it down because it's been on that. Yeah, let's go. Yeah, let's go 1700. 1700. Looking at $100 flat. I've got no problem with that. And then we'll go. Yeah, now we're looking at $100 higher, $100 lower with 1 unit. The same as I wrote with the equation here, 1 unit. We buy or sell equals 1 unit. And in here, price difference. So what I'm actually looking at is 1 unit times $100 price difference equals 100. Yeah, that's exactly what we're looking at. And now we're also going to place it on the chart so it will be easier for you guys to see. And of course, those nice things that I'm placing on the chart can be provided by the tiny arrow in here. But I'm just saving the time for you guys just to show you how it will look like. If those numbers will happen. So you don't have to do what I do, but I do it for you. So we'll make red. The red area is obviously here to help us emphasize the loss area. Green here is help us emphasize the profit area. We're looking at the white line as our entry. Then we've got a take profit as our green. Red line is our stop loss. And as we've learned, the take profit closed the position automatically with a profit. Stop loss closed automatically with a loss. So if it gets from here to here, we're gonna make 100 quid. And if it gets to here, same with the loss. Now from here, this is looking pretty good. But the thing here is that I'm not really planning to make $100. I want much more than that. So let's suppose that our target will be 1,000, not 100. And let's suppose that to hold this position one day is not really realistic, I think. What about weeks? Yeah, pretty good with that. If I can make $1,000 a week, I make $4,000 a month. Not bad. So let's go with 1 week. The movement, $100 expected movement. Okay, but how can I know that $100 is valid? Maybe $100 is too much to ask. There is a question from Ivan. This is very, very interesting. Is it possible that I can see the repeat of this? I'm at work. Yeah, of course. You can easily find the recording. In our YouTube channel. I'm sorry, guys. I'm just replying here to Ivan. To Ivan. I've replied to you. I hope that everyone else saw your question and saw my answer. So the expected movement that we want is $100. Now, how can we validate that this $100 is possible and it's not too far-fetched? Because I don't want to hold this position for longer than I expected. Maybe 1, maybe 2 weeks at most, but I don't want to hold it for too long, okay? There is a question here from Philip. Where did you get this 100 from? Okay, so thank you, Philip. The answer is what we saw, what we did in the past 2-3 minutes. You saw how we switched the time frame and we compared the levels from this candle and we made it. We looked at the levels. So $100 is my estimation of what can happen here. This is my rough estimation. Now we're trying to validate this, Philip. So how can this be done? One way is, of course, to analyze the candles and just subtract the open from the close and the high from the lows. This way we know, okay, the open here is 16.17, close is 16.58. That's roughly $40. And between the high and the low is 16.60 and 15.50. So I would say $100. But the problem with that, first, it's not precise. Second, is just one candle. So we can obviously see that the size of this candle and the size of this candle is completely different, which means that to have an actual average, I now need to do this exercise of subtracting and multiplying and divide it by the number of intervals. It's very time consuming. What we could do instead is we click on the indicator, we search your AVE for average true range, click and drag it to the right. Now I just need to define how many candles I want to withdraw our average from. Let's go with 10, and then I'm going to change the color as well. Yeah, now we automatically get the average for platinum per week automatically, yeah, based on the past 10 days. I can even go longer, I can go less than that, okay, but the reference is what we have on the chart. So this 10, the reference is the weeks. If we would be looking at days, this would be an average of days or hours. Now, what does this, so what does this mean? Are we too far away, guys, or we're in the range? I'm just gonna jot that down for you guys so it will be easier. Average, okay, so average movement for platinum per week equals 97,337. Now I'm going to ask you guys, are we too far away from the average? Okay, and to clarify, we are looking for $100 when the average is this. Are we too far away, guys, or we're almost at the range? What do you think? What do you think, guys? We're almost there. Thank you, Jamila. All right, so Jamila, you replied that we're almost there. Okay, what do you think, guys? Are we very close, or we're very far away from the range? Very far away from the average. Correct, correct. Thank you, Tommy. We're only $2.50 away. I'm happy that you understood. Okay, so great. So as we can see, we're not exactly at $100, and that's fine because the average is 97.337, but we're not too far away. So I can say it would make sense, right? Maybe it would take another day, maybe 2 days, but still, I feel like the decision of taking $100 away is not too far-fetched. Now, I'm gonna keep the plan, and I'm gonna keep the ATR here. It doesn't bother me in any way, so I'm gonna keep it here. And I'm also gonna look for the units. So exactly, Ivan, exactly, it's very close. So in the units, now we know that 0.01 is not enough. We see that the possible profit and possible loss is 100 when we are aiming for 1,000. So the next question is, that I'm going to ask is how many units of platinum we need to buy. Again, I'm gonna make it even even clearer. Okay, if we go target divided by movements, we get the units. So if we divide 1,000 by 100, what do we get, guys? Let's see who is quick. Let's see who is quick. Who knows? Who knows? Let's do it together. Even though the answer is quite obvious, but let's do it together. Oh, okay. Correct. Exactly right. Everyone who replied 10 is correct. Let's put here 10. Okay, correct. Everyone who wrote 10, like I said, you're all correct. So now when we place 10, it does make sense and everything is perfect. We've got here 1,000, 1,000. We're looking at 10 units. We also know that we have the budget for that. We're good. So we're gonna write here 10 and we're gonna get rid of everything that is here. Yeah. And we are almost done. Now, the last thing that I'm gonna teach you now, the last thing, but by the way, if there are any questions, I know that I didn't stop to ask about questions because I wanted to make, you know, to cover the practical part as fast as I can to give you this you know, system, procedural system for you to use. And I believe you guys probably know I can use it for my next instrument just as easily. I can delete this, you know, delete all of that. Just keep target time movements and units and use it for my next instrument just as easy, and this will work perfectly. Now, what I want to do at the moment, let's write down quickly our specs, and our entry is 1600. 1600. Take profit. Stop loss, which is 17. And we go up here. Yeah. Now this leads us to 10%. Yeah, 10% profit or loss. Okay, now what if I, as an example, what if I want to adjust this ratio? I'm going to tell you this in a moment. But first, I want you guys to understand how the leverage works. Okay, so we're going to do it quickly. We've only got 2 minutes. I'm going to try and make it in 2 minutes. We'll see how it goes. The price per unit for platinum at the moment is 1,687.7. The number of units that we take, we said it's 10. So if we go price per unit times number of units, we got the value. You don't have to know that because it's already written for you. But if I'll go 1687 times 7, something here disappeared. Yeah, times 10 equals 16,600. And yeah, okay. If I do it with a calculator, okay. Yeah. Now, what? So you already see that it's here. Now, what the leverage is giving us? The leverage is multiplies the leverage equals 1 to 10 multiplies buying and selling. Okay, so basically, our buying and selling power is not what we have in the balance, is what we will multiply by the leverage. So this is the margin, is the interpretation of what's available for us in our account, multiply by the leverage. In other words, if I'll divide my value by the leverage, I know my actual needed amount. So I can go value divided by leverage equals margin impact, which is necessary amount to open the position. Super, super simple. Now, because I have promised, I'm going to teach you how to adjust the ratio here. There is a question: why setting up profit and loss? What happens to the movement of the candle? I'm not well, setting up P&L. Yeah, well, I'm not exactly sure what you're asking, Patrick. If you can specify, if you can elaborate a bit about your question, I'm happy to answer. Now, when I'm looking at the same ratio here, we see the profit and loss are aiming for the same percentage. We don't always like that. Sometimes what we want is a ratio of, let's say, 1 to 2, right? Or even better than that, maybe 1 to 5 or something like that. So how can this be easily done? Now, because we know that the possible profit and loss are based on target divided by movements equals units, and as we wrote here, I think I deleted it by an accident, but never mind, we're going to write it again. We said that the movements times number of units equals possible profit or loss. Okay, so now we know that because we have 10 units over $100, we make or lose 1,000. What if we take this 100 and cut it by half? And instead of targeting 1,500, we'll make it 1,550. We'll push it up by 50. Now, what happens is the length of what we had from our entry to the stop loss is down by half, which makes our possible loss down by half. So now, instead of looking at 10% and 10%, we're looking at 5% and 5%. And then we've got this very, very quickly and easily, simply by dividing our length by half. Okay. Now, I think for some reason this happens. I don't know why, but we're gonna try and, okay. Yeah, if there are any questions, I hope this, Patrick, I hope that this answered your question. Guys, unfortunately, we're out of time for today. If there are any more last questions, I'm happy to answer. Any questions about what I've explained? Can I use this system for indices? Of course, Charlie. Of course, that's what I said in the beginning. That's what I said. This is supposed to be systematic. You can delete the numbers, and it should be easily applied to any other instrument as long as it's not currencies, because currencies are measured with pips. Unfortunately, guys, our time is, of course, with pleasure. I'm happy that you asked. So unfortunately our time is up for today. I appreciate everyone who joined us today. I hope that you could learn something practical to implement in your own strategy. You're all welcome to join us with tomorrow's live Q&A. And like I said, the recording can be found in our YouTube channel. Until then, I wish you all best of luck with trading. Have a fruitful week and have a good day.